Secretary Guston suggested that with the tariff rates as high as they are now, it's effectively an embargo of trade between the United States and China. Do you see it that way?
That's true. 145% is very high, and it won't be that high. It's not going to be that high. It got up to there. We were talking about fentanyl, where, various elements built it up to 145. No, it won't be anywhere near that high.
And what level do you think it'll come down to if you haven't?
It'll come down substantially, but it won't be zero. It used to be zero. We were just destroyed. China was taking us for a ride, and just not going to happen. It's not going to happen.
It all started with a single sentence, unexpectedly delivered straight from the White House. It was brief, but it hit the global economic stage like a detonated mine. Tariffs on Chinese goods will be significantly reduced. Markets instantly froze, allies held their breath, and Beijing braced for concrete actions. But why now? Why has Washington chosen this moment to make concessions, breaking away from its long-standing strategy of maximum pressure? This is not just a gesture of goodwill. This is a 180-degree turn in the very trade war that Trump himself reignited upon his return to the White House. Over the past several months, the U.S. tariff policy resembled a true economic storm, up to 145% duties on Chinese goods. This included not only electronics, but also construction materials, textiles, raw materials, and even automotive components. Trade between the two largest economies in the world was suffocating. And now, an abrupt shift. According to the Wall Street Journal, the White House is considering cutting tariffs by more than half, to between 50 and 65%. Moreover, the Trump administration is discussing the vast possibility of introducing a tiered system. 35% for goods that do not affect U.S. national security, 100% and above for strategically sensitive items such as microchips, lithium batteries, and telecommunications equipment. But the key point is, this move will not be unilateral. China must take a reciprocal step. We will not offer concessions without an agreement, emphasized White House Press Secretary Caroline Leavitt. So, what's behind this reversal? Pressure, and it's coming from three directions. First, American business. Corporations have begun reporting losses, rising logistics costs, and supply chain disruptions. At the same time, inflation has intensified, not in theory, but in real prices for groceries and everyday goods. Second, financial markets. After the announcement of a potential tariff cut, the Dow Jones Index jumped by 4.2% in a single day, and the Nasdaq posted its strongest growth in the last 6 months. Asian markets reacted even more sharply. A real surge in investor activity was observed in Hong Kong and Tokyo. Treasury Secretary Scott Bessent stated bluntly at an economic forum, "The trade war with China is not working. We need to find a way out." And third, the pressure from international allies. Canada and the European Union had expected that. Once Washington reduced tariffs for Beijing, it would automatically reassess its trade relations with them as well. But that did not happen. Brussels responded sharply. If the U.S. is ready for dialogue with China, we demand equal treatment. Otherwise, it's a one-sided game, stated representatives of the European Parliament. In response, the EU confirmed that it would maintain its current retaliatory tariffs of up to 25% on American goods and began preparing a new package of countermeasures. Canada, for its part, insists on the removal of the 25% tariffs on its agricultural and industrial products. The Minister of Trade stated, "We will not allow the U.S. to play a double game, easing conditions for some while maintaining barriers for others." But it's not that simple. The tariff reduction is not a goodwill gesture, but a calculated move in exchange for a trade agreement. And in this agreement, China is expected to guarantee broader access for American companies to its domestic market, protection of intellectual property, transparency and export subsidies. Beijing, in turn, demands the immediate reduction of tariffs before any agreement is signed. Equality and mutual respect are the foundation of any dialogue. Pressure and ultimatums are unacceptable, reads a statement from the Chinese Ministry of Foreign Affairs. In response, China has already raised its tariffs on American goods to 125% and imposed a procurement ban on the top 20 U.S. companies, including suppliers for the Pentagon. As a result, tension hangs in the air. No one wants to make the first move. And this is where things get interesting. According to analysts from Bloomberg and Reuters, America's allies are preparing to seize the moment. The EU is actively pushing the idea of creating alternative trade blocs that would include Canada, Japan, and Australia. This project envisions mutual tariff reductions, but without the United States. Canada, meanwhile, is ramping up cooperation with the EU on oil and gas supplies, which could directly undermine the United States' energy security. India and South Korea are ramping up exports to China, taking advantage of the current situation. And what about China itself? It is strengthening its presence in Asia by investing in ports, warehouses, and logistics hubs across BRICS countries. This is a preemptive move. Additionally, in March 2025, China significantly increased its gold purchases and reduced its dollar reserves, which alarmed Washington. According to the head of the Federal Reserve, any challenge to the dollar as the global reserve currency is a threat to stability. The question is, what will happen if the United States really does lower tariffs to between 50 and 65%? First, a partial restoration of supply chains, especially in the electronics and home appliance sectors. Second, cheaper goods on the American market, which may ease inflationary pressure. But, and this is key, the return of manufacturing to China will not reverse the ongoing process of relocation to Southeast Asia. Business has already adapted. And another point, American allies will feel betrayed. If concessions are made only to Beijing, it could trigger a chain reaction of demands and potential trade conflicts. That is why the White House is hesitating. It is walking a tightrope. A decision on tariff reductions may be announced in June 2025, according to sources within the administration. And everything depends on the outcome of the negotiations. But one way or another, for the first time in years, Trump has realized China cannot simply be fought. It must be negotiated with. And now, attention. If the United States gives in to China, but not to the EU or Canada, it could undermine trust in the US as a partner, not in 10 years, but this very year. What will happen to NATO if trade conflicts spill over into politics? How will Germany respond? Will the Beijing-Moscow axis strengthen under conditions of American isolation? These questions are already being discussed, not only in G7 meetings, but also in closed-door sessions in Washington, Brussels, and Ottawa. Share your thoughts in the comments. Is this a temporary maneuver, or the beginning of a global shift in U.S. trade policy?